Hi, this is Steffi, and welcome to the Financial Fox, investing and innovation ideas with a twist. Today, we are digging into the world of DeFi. For who is not familiar with the term decentralized finance, but I'm sure you are, with Ajit Tripathi, head of institutional business at Aave, one of the leading decentralized lending protocol out there. We discuss how Aave is building an ecosystem for decentralized finance and also global institutional partnership. Why are financial institutions coming into the space right now? And what is their approach? We talk about traditional markets versus crypto, trading experiences, but also the challenges of DeFi, including security, education, and obviously rules and regulations. But there are big opportunities as well. And we are going to discuss all of these with Ajit. But before I'm going to welcome him on the show, I would like to say thank you to all our subscribers. And if you're not subscribed yet, just click the button and make sure that you are on our list to get updated with our next interview. It is great to have you all helping the channel to grow. And I'm sure that you're going to enjoy this conversation a lot. Hi, Ajit, how are you?
Very well, Stefania. It's a pleasure to meet you.
It's really great to have you on the show. So first of all, I would like you to tell us a bit about yourself, about your journey, your background. As I understand, you have been working for quite a few years now, working on how to bridge the gap between financial institution and technology. So I think that would be great if you can go through that, and also how you arrived to Aave.
Yeah. So, I started my career quite a while back in 1997 when we were right in the middle of, the starting of the dot-com boom. And if you listen to Mark Cuban today, then, he will say that the DeFi explosion is similar to the beginning of this, of the dot-com, of the internet era in every possible way, right? So there's a lot of excitement. There's this incredible potential, and you kind of know that this is how the world is going to be changing. So then I worked in investment banking, market risk, credit risk, quant modeling, large scale derivatives pricing at Goldman. Back in 2005 to 2010, quite a bit of work around trade surveillance, lots of analytics. So I have an engineering background. Went to capital markets tech for a long time, worked at Barclays Capital, Goldman, did a bunch of regulatory work at Credit Suisse and UBS. And then went to PwC, and at PwC thought maybe I should do something new and different. And at that time, 2015, blockchain technology was really, everyone wanted to talk about it. So I really got intrigued by what was going on, and then I realized that this thing has just incredible potential. Back then, I met a bunch of Ethereum OGs, founders, and so on, and it was really an eye opener for me, and that's how I got started with this Ethereum and blockchain journey. Went on to work for Consensus and build out the fintech business for Consensus, and quite a bit of the UK office as well. And then I did a couple of consulting projects with Binance and Paxful, which are obviously very well known crypto firms. And my entire journey there across these crypto firms has been about bridging financial services, regulated institutions, market infrastructure, which is kind of my background with crypto. And so that's been a great journey, because in 2015 no one wanted to talk about Bitcoin. Now everyone wants to talk about Bitcoin. So DeFi is so you can see that I'm wearing a Bitcoin shirt. I think of I think of Bitcoin as the first step towards DeFi, right? So DeFi is kind of where we want to go. We want to have these on-chain, decentralized, networked financial primitives and applications. And Bitcoin sort of was the first example where we said, look, let's create a bearer asset which can be used for payments, which can be used as a form of money. Now, what do you do from there, right? So that brought me to this whole DeFi journey, I was fortunate to sort of get this opportunity to work for Aave and then bridge financial institutions with DeFi.
So before we go into Aave, you just mentioned about we mentioned about bridging this gap between financial institution and technology. Do you maybe just want to explain why financial institution has always been kind of skeptical towards new technology rather than obviously the main retails and individuals?
Yeah, no, I don't think financial institutions, have been reluctant. In fact, if you look at the technology budgets of investment banks, right? So we spend more on Goldman Sachs, JP Morgan, they spend more on technology as a proportion of the total budget than most other industries. So capital markets are early adopters of tech. What has happened after 2010, the financial crisis is that there is an incredible amount of regulation that's been imposed on banks, and we all in the right spirit, right? So, but now if you look at how the industry changed when I was in the capital markets in 2010 and a few years later, there has been just an incredible amount of regulation controls. So the risk appetite of banks has kind of gone down, and also there is a lot less innovation and creativity in banking per se. So what that does is that there are lots of things you want to do as an investment banker. So for example, you want to I know a lot of investment bankers from Goldman and JP Morgan who've been very interested in Bitcoin, have been learning about Bitcoin and Ethereum and smart contracts on their own. But when it comes to interacting with this technology as a bank, then they kind of have to really get 50 permissions before they can actually do any experiments.
No, I'm saying you're basically saying that it's not they are against innovation, is the fact that because is unclear the rule and regulation and the security, and obviously they are taking risk for clients, so that's why they are not keen to jump in at the beginning.
I mean, banks have to get a lot of approvals, both internally and externally, before they can do anything new, right? And so even if they want to launch a mobile bank, right? So if you look at large banks trying to launch mobile banks, it's incredibly painful. The amount of paperwork that has to be done is just huge, right? So crypto is obviously something that is even more disruptive, even more interesting, but even more revolutionary. So there has been this. A lot of control functions and compliance functions and so on don't necessarily understand crypto, and there is a lot of this, which means that if you're a banker or a trader or a technologist and you want to do something new, you have to go through a very long list of approvals. So it's not that banks are against any of this stuff. It's just that if you're a bank, then it takes a long time to do anything new because of the way regulation and controls have shaped up after 2010, right? So regulation slows banks down in everything they do.
But obviously the landscape is changing now because it looks like some kind of guideline and regulation are going to happen here, because obviously financial institutions, they are not ignoring the space. So we need to some kind of regulation around crypto, and this is going to be quite challenging for DeFi. So how do you think these rule and regulation, they are going to impact the DeFi ecosystem and the main DeFi project?
So the way I see this, the objectives, the goals of financial regulation are the same as the goals of DeFi, right? So when you think about what we're trying to achieve in DeFi, we're looking for more transparency, more automation. So financial system as it is built today does not meet the needs of most consumers. So if you look at the costs in banking, they're enormous, right? So then there is no transparency, which means every year or 2 years we get a Wirecard or we get an Archegos hedge fund type of debacle. So the systemic risk and other conduct risks in the system haven't gone away. in spite of just more and more paperwork and rules being created, right? So every time something goes wrong, we create more rules, more paper, and then that paper has to be implemented by a lot of people and then audited by a lot of auditors. But in the end, it doesn't work, right? So DeFi is saying, look, how about we take a different approach to building a financial system, and we, work with transparency, and we work with automation and efficiency. So we automate everything using smart contract technology wherever we can, and we provide on-chain analytics and other tools and technology to really deliver that kind of transparency that consumers need. And then we also eliminate market efficiencies by creating a transparent automated financial system where things cannot be hidden behind four walls for too long, right? So DeFi is like, okay, let's build the financial system from the first principles, build it to be transparent and efficient and automated. And then, because those are the goals of the financial, regulated regime anyways, which is what we want to protect consumers, we want to reduce systemic risk, we want to, make everything easier, more accessible, safer, and more convenient for customers. I mean, that's exactly what DeFi is trying to do. Now, the important thing to understand is that this is just year one or year two, right? So people have been building DeFi for the last 4 or 5 years, like people like, my boss, Stani, and our CEO, Stani, and the team, and the Aave team have been building for 3 or 4 years now. But it's only within the last 2 years that DeFi has reached this scale and usability, where it's time to start taking DeFi seriously as sort of the foundation for the global financial system. So when we talk to regulators are very supportive. If you've read Hester Pierce and Brian Brooks's articles on DeFi, they're all very supportive of what DeFi is trying to achieve. Now, obviously, we need to work with all the members of the society, regulators, lawyers, artists, everyone. And then DeFi is an open financial system in which everyone can participate. It'll need to be regulated differently, in the sense it's technology first. So the regulating with a lot of paper isn't kind of the answer. It has not worked for the traditional financial system, and it's not going to work for the internet either. So regulators are also getting more and more technology savvy, and they are starting to learn what this technology does, what sort of tools can be used to achieve the principles and objectives of regulation in a DeFi environment. So we do a lot of that type of work, in supporting, educating, and also exploring RegTech solutions that would potentially, meet the objectives and principles of regulation. So the short answer is regulation is not a barrier to anything, right? If you look at Bitcoin, once there was regulatory clarity on Bitcoin, now Coinbase and all the other institutional markets have grown enormously. There are banks and hedge funds coming into Bitcoin every day, and the path from there to DeFi is very short, right? So because a lot of in 2015, when I used to talk to institutions and regulators about Bitcoin, it was, oh my God, isn't Bitcoin, it's this scary thing. And in 5 years, we've come to a point where, everyone goes on CNBC and says nice things about Bitcoin, right? But the journey from there to DeFi is actually very, very short, because the principles are the same. And, so a lot of this is actually happening, and we will see a lot more friendly regulation that allows DeFi to scale to internet scale and really, provide a better financial system. I'm very optimistic on where this is going.
That's great. What I think is that all this crypto space has kind of grown from the bottom. So from individuals like me and you, from a retail customer, they just started to trade and use the app and get into the technology and start to do things. Now, there is a big gap that this kind of technology project haven't actually captured, which has been financial institution. And if we also think about the neobank and the different kind of approach that the banking system is taking, is all about user experience, it's all about, people, individual, which is great. But there is this gap of financial institution that also has to be served. And they are important because they carry lots of money. So what would you say here, and what do you think the space has to do in order to have more like an holistic approach to include?
Look, I mean, banks, no one exists to serve banks. Banks exist to serve consumers, right? So I wouldn't say, ultimately, it's the financial institutions that exist to make life easier for businesses, for individuals, and for for the society at large. So now what blockchain technology is doing is that it's starting to decentralize institutions and corporations from the ground up, right? So for example, if you want to make a code change to a derivatives pricing model at Goldman, you have to get a job with Goldman, right? But if you want to make an improvement or a bug fix in Aave or in Yearn or anything else, you don't have to get a job, right? I mean, you're a developer, you have a great idea, you can be based in India or in I mean Eastern Europe or wherever else, and you can come back and say, look, I have a better idea, there is a better way of doing it, and people will go with it, right? So decentralization is happening at a very basic level. And if you look at how DeFi has been built, it's been built by developers, who don't necessarily work for a company and don't necessarily. So we are in a very interesting economic shift as a result of this technology. So what it means to be a financial institution is itself going to change, right? So DeFi protocols that are governed by communities and by decentralized organizations will themselves be the institutions of the future. Now, a lot of forward-thinking institutions realize that, and the way they are starting to engage with DeFi is they're participating in governance, they are experimenting with DeFi, they're learning about DeFi, they're deploying their assets, and they're using DeFi protocols. So there are all sorts of incredibly smart people in CeFi, in centralized financial systems, that are already exploring. Look at PayPal, right? So the client I used to work with, BBVA, with that BBVA now runs crypto for PayPal. I mean, so people at that level of intellectual capability and are sort of already saying, look, we need to do something better. There is a better financial experience of financial services we have to provide to consumers. Digital money is inevitable, and everything else on top is going to be digital and more and more decentralized. So people are already thinking in that direction. The point is that currently, there is an early adopter set of financial institutions that are already interacting with DeFi protocols to the extent they can, and a lot. I mean, this small wave is going to be a flood in no time, just like Bitcoin, right? I mean, now everyone is in on Bitcoin. We're going to see the same thing with DeFi.
Okay, and you mentioned governance, which is an interesting point, because actually people holding the token of a project, they can actually change the protocol, which is something that's completely new, and it could be quite challenging for the current financial system. How do you think institutions are taking that?
Yeah, so see, the main challenge there is legal, right? So typically when you have a financial service, then that financial service is operated by someone, right? That someone is either a natural person or a legal person, which means, if you're taking someone to court, then you know who is liable for the performance against certain obligations. Now, the law in the space of DeFi and DAOs is evolving, right? So if you've seen the Wyoming DAO law, it sort of provides limited liability structure to decentralized autonomous organizations, which typically are the vehicles through which DeFi protocols are governed. So what we're going to see is other jurisdictions start to create legal frameworks that allow decentralized governance and token holders and these governance participants to sort of govern and essentially offer service in a mutualized way. And so it's technology always moves first, then markets follow. So people have been building on smart contracts for 4 years. Aave has been people have been building Aave for 4 years. So now then markets follow, and people say, wow, this is a great service, great UX, great product, secure, let's just go use it. Then comes the then people say, okay, so how does this actually work, and how do we govern this, and so on. So then all of the legal regulatory frameworks, it's the same with Bitcoin, sort of follow. And so a lot of the regulatory frameworks will be created to match the potential of this new technology and the economic models it's creating. And that's already happening. It's a slow process. Not all jurisdictions will move at the same pace, right? So some will sort of say, wow, this is an opportunity, let's just get ahead of it. Some will say, oh, no, we are scared of it. And, this looks too revolutionary, we can't get our head around it. But then the innovators and the people who are, sort of ahead will show that, there's the economic advantages of adopting the internet were enormous, right? And this is just an extension of the internet. So if you read internet history, then and Mark Cuban is exactly right? So what happened and I was there in 1997 to watch that whole drama unfold. So what's happening now is exactly parallel to what happened with the internet. Countries and jurisdictions that adopt this internet, this new way of building financial systems and manufacturing financial products and services, will get ahead of the ones that don't, and then the rest of the world will follow. And so it's a slow process, right? It's not going to happen in 2 months or 6 months, but it'll happen faster than we think.
Exactly. So, Ajit, you are the head of institutional business at Aave, which is obviously one of the leading lending protocol out there. Do you maybe want to tell us a little bit about Aave? What's your focus of work? And if you see lending as the main developing verticals in the capital markets for institutional clients?
So Aave so when you think about DeFi, then DeFi is is a set of interconnected financial components, right? So it's the manufacturing layer of fintech. Now, the base of all of this is liquidity, right? So first of all, you have stable coins. Stable coins are essentially how you represent money on a blockchain, right? So on a public blockchain. On top of that, you have liquidity protocols. So crypto and stable coins can be mutualized. And so Aave provides liquidity to the rest of the DeFi space. And so which makes it a pretty fundamental building block, right? So people can essentially deposit their assets into Aave, or people can borrow their assets from Aave, and that sort of creates a very interesting market and yields in a low interest environment, which offers a lot of potential to people to earn, ordinary people also to earn relatively high yields in where they're essentially losing money to inflation. So on top of this, a lot of other users that use Aave then use the same borrowing from Aave in other protocols. So if I can borrow stable coins from Aave, then you use that as leverage on synthetics or as collateral on something else. So DeFi is just this one interconnected system, and in which Aave provides a very fundamental service as a protocol, and that service is essentially providing liquidity, one a very important, secure, high quality UX environment for this liquidity to then serve the users across DeFi. Right. So then what's going to happen is, it's not just the individuals who use Aave. I'm actually very pleasantly surprised and by how many centralized crypto lenders have actively been using Aave. Also, there's not a day so a lot of what I do is really support, right? So we get a lot of institutional users who want to learn or want to sort of the protocol is decentralized, so a lot of my work is, education, advocacy, working with, learning from people who are already using Aave, institutional users, to see how their user experience and their journeys can be improved, how they can participate more in the protocol governance and so on and so forth. So DeFi adoption is happening at a much faster rate than anything I saw in Bitcoin, and that's true even for institutions right now.
Do you see any other verticals, let's say insurance or anything else that you think is going to drive attention of the institution?
Very much. So, insurance protocols like Nexus Mutual, Armor, and so on are already very, popular. And there are, institutional users who are experimenting with what insurance looks like in a decentralized environment, for sure. But that's all still financial services, right? I mean, all of this is just finance. Now, what's far more interesting is when finance starts to interact with the real economy. So I wrote an article 2 years ago saying, DeFi needs a Web3 economy, right? So because finance only makes sense when there is actually commerce that finance is supporting, right? So people are buying and selling. To buy and sell real things or digital things, they need to borrow. They need to, exchange value in other forms. So banks serve the needs of businesses and consumers who are actually, you know, engaged in commerce. Now, what's happening with NFTs is that we are starting to see Web3 commerce for the first time, right? So just in the same way that we saw, you know, back in 1995, people used to people used to submit a form on a website, say, I want to buy this dress you're selling, and I'll send you a check, because there were no credit card payments, you know, there was no SSL and so on and so forth. So Netscape was still coming out. And that's how e-commerce used to work. So that's kind of how where we are with DeFi to some extent, right? And what's happening now is that, you know, there is this whole Web3 commerce that's starting with NFTs, where people are selling, you know, digital goods. But then that sort of technology is also going to start to touch real world, and then Web3 commerce is what's going to take off. And that Web3 commerce is going to be that economic activity will be supported by DeFi, right? And that's really the whole picture. So gaming, media, entertainment, these are $60 to $200 billion industries each. Music, whatnot, and art, and, you know, it's crazy. So this whole creator economy is also going to get more decentralized in the shape of Web3 commerce. And there's just no way centralized finance can serve the needs of that decentralized Web3 economies, and that requires a financial system, which is DeFi. So I mean, the economic logic for this whole thing is not because of finance; it's because, you know, the world has changed and the commerce has changed.
Exactly. I think you mentioned NFT, and this bring up, you know, all the question about, and all the area of new asset class, and the fact that there is the ability now with the technology to tokenize any kind of assets. I mean, you mentioned about the dress. I'm glad you did that, because you pay with the check, you know, you give something and they give you a receipt or something. Now the NFT, the sales has got the NFT, which represent a receipt in a way, but also track the provenance, show the history. At the same time, it gives you another version, which is a digital version that you can use in the digital world. So it's kind of like crazy what is happening. Do you maybe want to, from an institutional perspective, or maybe generally from an investment perspective, how do you see this asset class kind of evolving? Let's say Bitcoin as a store of value, if it's going to stay like that, and, you know, the NFT space.
Yeah, so you know, I mean, it's a space of incredible creativity. I mean, what's going to happen is, you know, people are starting with the easy bits, you know, digital art, music, so on and so forth. But then there are people who are, you know, like Materium, who are experimenting with real world objects. You know, things like William Shatner toys being sold as NFTs, and those NFTs actually represent legal rights in the real world. So what happens next, right? Then suddenly you'll be selling your, your computer. Suddenly you'll be selling your Xbox. Then I think people will realize technology will evolve, the law will become more mature around it, and there will be more legal precedent. And then people will say, wait, why don't I just sell my house as an NFT on the blockchain, right? And because now there are legal claims that can be enforced in a court of law, and the property rights that come with the sale of the house are actually enforceable. So these, what you're seeing today, right, is as I said, you know, in 1995, people weren't buying cars on the internet, right? People were buying dresses and toys, and I mean, small things. So with NFTs, what you're seeing is, sure, I mean, you know, these things look big because you see one Beeple and it's going for 69 million or something. But at the end of the day, we are still selling some pretty small things, right? Now, what's going to happen is once the technology, marketplaces, consumer behavior, law, all of that becomes more mature, you will see a whole bunch of other incredibly valuable stuff, you know, auctions and houses and property. So people, you know, I worked with HMRC back at Consensus on a project which was about representing land titles as NFTs, right? I mean, these are non-fungible assets. So then how do you tie that to the real world and so on is kind of the harder part. But now people are already, you know, kind of going in that direction and saying, look, now we have mintable, we have rarible, we have super rare, blah, 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 blah. But the technology, you know, once you sort of fortify some of the legal stuff around it, the technology can be used for anything else. And suddenly you will see Amazon and eBay and, you know, God knows who else start to sell incredibly valuable things as NFTs on, you know, Picasso as an NFT on and so on and so forth, and with a clear connection to legal rights in the real world, and that completely changes the size and the picture. So I wouldn't say, I wouldn't worry about whether whether digital art is an asset class. I'm sure it is for people who are into art. Same thing with music. I'm into music, so for me, a Beatles something signed by John Lennon would be pretty amazing. I mean, he's not there anymore, but I'll totally pay for something signed by Mark Knopfler. So yeah, is it an asset class? Sure, it is, right? But I think let's think about what this looks like in 10, 20 years time, right? In 10, 20 years, in 10 years time, this looks like everything on Web3 commerce. And that's
from an institutional perspective, where do you think is their interest? Obviously, we see lots of institutions getting a position into Bitcoin, which is kind of the first gateway to crypto for them. They are now looking into DeFi. What you see interest in NFT as well? Just tell me a little bit from your experience.
Yeah, short answer is yes, right? So one thing I learned from working with banks all these years is that banks follow customers. If you
to serve them, so that's good.
If you want to work with banks, you find who their customers are. so I mean, bankers are incredibly smart people, and they know where their customers are. And so banks are going to start to offer products and services, loans against NFTs, and DeFi will go there first, right? So with NFTs as collateral and so on and so forth. And then the banks will look at it and say, wait, this stuff actually works. And the value here is a few billion or a trillion or whatever that is. So what's cool about DeFi? I used to work in enterprise blockchain, right? And we used to talk all day and write one line of code. In DeFi, we write code all day, and then we talk for half an hour, right? So the speed of building and the speed of creativity is just incredible. So banks are looking at this and saying, wait, the innovation in this space is just incredible. And now these guys are not just building mobile front ends, they're actually changing how this whole thing works. So where does this all go? I mean, and where is the opportunity for us, right? And they're going to follow their customers. With NFTs, what's happening is now, an artist has a bank account. I mean, so customers, right? So Christie's and Sotheby's, Gary Vaynerchuk, Chamath, all these guys have bank accounts, and banks are not stupid, right? Bankers are really smart people. So they're going to find a way to serve this market. And that's what's really cool about NFTs and DeFi and institutions. So we'll see a lot of innovation in that space.
Amazing. Ajit, listen, thank you so much for coming on the show. I think it's been great to have you here to share all these great insight. Now, where people can find you, in case they want to get in touch with you.
Yeah. So, they should go to Aave.com and play with Aave and learn about Aave, how Aave works. Then in my case, my LinkedIn is Ajit KT and my Twitter is Chain Yoda. CHAINYODA, and they can find me on either LinkedIn or on Twitter. And would love to hear more. And if anyone has any questions from the audience, I stand ready to answer them.
Fantastic. Okay, thank you so much, and I hope to have you back on the show. Thank you,
Stefania. It's been a pleasure. All the best.
Okay, this is everything from the Financial Fox. I hope you enjoyed the episode, and if you haven't done it yet, subscribe to our YouTube channel, and I will see you next time.